Hey everyone, Rivian reported quarterly production and delivery numbers on July 2nd, and that news, understandably, had been overshadowed by the much earlier announcement of its deal with Volkswagen. Still, the update on production and deliveries is important for Rivian stock investors to consider. I will digest this latest information here and explain what it could mean for Rivian stock investors. So let's jump into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Rivian reporting on July 2nd that it produced 9,612 vehicles and delivered 13,790 vehicles during the same period, a roughly 4,000 difference between production and delivery, favoring delivery. That's usually good news for investors, especially recently because the supply and demand has shifted in favor of the customers. There's more supply than demand. So if deliveries are outpacing supply, which is production, that's good news because Rivian can always ramp up production. Remember, in their current Normal, Illinois facility, they have the capacity to produce roughly 215,000 units annually. And this year, they're saying they're going to produce 57,000 units total for the year. So the demand and supply is way out of balance. It's way more supply than demand. So if there's a couple of quarters where, deliveries are robust, that means customers are taking delivery, then that's good news because Rivian could always ramp up production to meet that increase in demand. It would be more troubling if it was the other way around, where deliveries were way below production. And that means that the company is getting stuck with the vehicles that it's producing, which is bad news because then they need to discount those inventory to get them to customers, and that's going to decrease profitability, and that's a further sign that customer demand is very weak. So that would be very bad news. But this side, that's good news. More delivery than production is good news for Rivian stock investors. Now, that comes on the back of the first quarter where the company produced 13,980 vehicles and delivered 13,588. So very minor growth there in deliveries from 13,500 to 13,800. And they are roughly on pace, a little bit behind pace in reaching their goals for the year. If we just look at deliveries, they're at roughly 28,000, slightly below pace. And if you look at production at 23,000, they're slightly behind pace as well. But remember, Rivian took a couple of weeks in the first half of the year to upgrade production facilities to lower costs. And so that created a bit of a gap for production. And so they can make up for it in the back half of the year if there is customer demand. Rivian does not want to produce just for the sake of producing. They want to produce only if they feel they can sell these vehicles. So that's the key, is to keep in mind if they're getting sales. And so far, they are. So far, it looks okay. Now, the next thing for Rivian stock investors to consider is profitability. So you can always produce and sell vehicles if you're willing to sell them at such low prices that customers are willing to buy them, but you're taking losses. So you're absorbing those losses just to make the cars more affordable for customers. And that's been roughly what Rivian has been doing, just to kind of ramp up scale, because at current prices, it's losing a lot of money. In the first quarter of 2024, the gross profit per vehicle delivered was negative 38,784. So out of each vehicle it sold, it lost nearly $40,000. It's absorbing those losses right now because if they can reach that 215,000 unit output, then they can be on better footing. Perhaps they can be profitable if they produce 215,000 and sell 215,000 units. Or If they get up to that level, 215,000, then remember they have that new manufacturing facility in Georgia that they were working on that they paused because customer demand was very weak in 2024 and 2023. So they don't need another facility right now if they can't even sell whatever they're able to sell in their current facility. But if they are to get up to that level, remember they're coming out with a lower priced model, which could induce customer demand. It's not guaranteed to induce customer demand. Then they go to that next facility. Then they can perhaps reach profitability. It's all a big question mark for Rivian right now. That's the big question mark for Rivian, is can they get to a point where they are self-sustaining, where they are not losing so much money on each vehicle sold. Now, management has said that in the fourth quarter, by the fourth quarter of this year, they will be profitable on a gross profit basis. So they'll be able to make a profit on each vehicle sold. Now, of course, the recent news on VW investing up to $5 billion into Rivian will help the company reach profitability, not just because they're getting $5 billion from Rivian over the next few years, from VW over the next few years, but the joint venture that they created is going to reduce the software cost per vehicle for Rivian because they're going to share those costs with Volkswagen. So that's going to lower costs meaningfully per vehicle for software, which is a big part of Rivian's costs per unit. So overall, solid news for Rivian stock investors. The company on pace to hit their target for 2024 of 57,000 vehicles. The next question becomes, what were the profits like in the current quarter? We didn't get that information on the press release. All Rivian told us is what they produced and what they delivered for the current quarter, which ended June 30th. So when the company reports its quarterly financial statement, we will get more information. We will know precisely how much gross profit they earned off of each vehicle. We'll learn if they're making progress on that promise of becoming gross profit margin positive by the end of the year. And we'll learn how the impact of the VW investment will impact the company's profit prospects over the near term and longer term, as the company will hold a conference call after the markets close on August 6th. So there's a lot to look forward to if you're a Rivian stock investor. A lot of good news coming out from Rivian, of course, with the VW investment. And it gave a nice injection into Rivian, which was desperately in need of one because of how much money the company had been losing and the direction of consumer demand for electric vehicles. So great news here for Rivian stock investors. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.